Your little decisions become habits that affect the bigger decisions you make in life. Elizabeth George. My friends, let your little choices that become habits be one of them at least 10 to 15 minutes a day charting the markets with us. And of course, when you get serious, we hope that if you don't have a charting software, you use what we use here. This is TC2000. You'll see in your show notes every day that we have a link for you to get $25 off. I have used all sorts of charting software, charting platforms. I don't know of anything better than TC2000. Here where I live is where it is based. All their software engineers are about 5 miles away from me. These folks are amazing. If you have particular indicators that you like that you don't see on the charts, and they have almost everything, these guys can put them together for you. I've never seen anything like it. The most helpful, innovative, amazing charting company there is, the Warden Brothers TC2000. Like I said, follow that link for $25 off. You also get to support us and help us pay for some of our bandwidth and the other stuff we do here for you. Don't forget Patreon Members Live question and answer call-in session this Wednesday, the first Wednesday of September, the 1st of September, 12:30 Eastern Daylight Time. We see stocks and bonds are up for the day, gold and Bitcoin down. Let's jump into these charts. Now let's start on the weekly. You can tell I was looking at that 2-day because it was important. What's up with this weekly? Well, the weekly is trying to cross over going up. Isn't happening yet. Getting closer. We'll see if there's going to be and when I say weekly, I'm talking about the price percent oscillator on the weekly chart. Derivative oscillator gaining upward momentum. Price percent oscillator pretty much laminated. Maybe it'll make it over by the end of the week. Green up candle forming for the week. That's good to see. Look at the 2-day. We see 6 days of strong up movement. Crossover on that 2-day is not a 2-day recross because the weekly is still negative, but maybe we'll have a weekly vertical crossover by the end of the week. We'll see. But we do have the 2-day that has crossed over, so we're going to go ahead and initiate that. We will move the line. We will take the arrow, and we will edit it and move it around. There we go. It shows it's going up. What about the half day? Well, the half day crossed over all the way back on Monday, the 23rd of August in the morning. Went up and then slid sideways on Thursday, the 26th. Then Friday and Monday heading up again. Derivative oscillator gaining momentum. Price percent oscillator heading up. Things looking good. Going to go from the Qs, from the S&P to the Qs. Qs is, of course, the Nasdaq 100. It, unlike the S&P, has been positive for quite a while. It crossed over going up. Back on, let's see, that was Friday the 2nd of July. Went up for quite a while. And then, of course, the 2-day chart is what reversed on us. We see now the derivative oscillator gaining a little upward momentum, first time in a while. Price percent oscillator heading up, nice green candle forming. Now, the 2-day is the one we told you to be on the lookout for a 2-day recross, which it did do at the end of the day on Monday. How many of you are waiting for that? How many of you are doing a practice trade in that? If not, why not? Now, no reason you have to do it, but if you're not doing it when it's setting itself up, you should be asking yourself a question, why not? What did I not like? Did I not like the fact that the derivative oscillator didn't cross with it? Did I not like the fact that it's reaching a higher high? Is it supported by strong moves in the weekly chart? Not super strong. But again, what's your reasoning? And of course, we look at the intraday chart. We see it up in the morning, further up in the afternoon. You don't have to do these trades, but when you don't, when they have set up, it's always just a good idea. Double check yourself and make sure you're articulating reasons for not doing so. And then follow that up and see if it makes sense. Again, if you find yourself being wrong time and time again, not jumping in, then that should also be like a reverse barometer to you to say, hey, wait a minute, maybe I need to rethink my decision-making process. And I will tell you, one thing that I have been having incredible results in lately, for those of you who are Patreon members and you are following those 20 weekly vertical crossovers we give you every week, we have 10. We always look for 10 going up and 10 going down. Sometimes there's more or less per. We almost always find 20, but depending on how strong the week is up or down, I have found over and over again, I do these little experiments on the side you guys never see, share those with the Patreon members quite often, but I have been doing up trades on those things at 2% like clockwork. How many of you are practicing those? Again, if you want those kinds of opportunities every week, then become a Patreon member at any of the 3 support levels and you'll get them. Let's move on to 20-year bonds. What do we see there? Well, 20-year bonds are up just a little bit, 0.22%. And what do we really see here on this weekly chart? Just starting off with a sideways slide again. A red open box top, a slowdown in the up movement. Price percent oscillator just about flat. Derivative oscillator positive, continuing to lose momentum. 2-day chart, what do we see there? We again see it negative and about flat. Derivative oscillator losing downward momentum. What's the most likely thing to happen in 20-year bonds? I don't know if it's going to at some point be a 2-day recross going up, or if that weekly is just going to finally give up the ghost and head down. We'll continue to watch, wait, and see as things move along. Remember, we do have a short on 20-year bonds. In fact, I'm going to put the short video about inverse funds, how to make money in your practice trades when markets crash, and what we mean by making money there is successfully practice trading. If you're interested in inverse funds, man, you got to practice trade those for a long time to see if they're really something you want to get interested in. I'll put that at the end of today's video, a link to that training video. What do we see on the half-day chart? Well, we saw at the end of the day things crossing over, going up, and just managed to make it at the end of the day. 2 days of nice up movement. Derivative oscillator also turned positive. So we'll just have to wait and see how 20-year bonds sort themselves out. Now we get to the downers. Gold 0.49% down. Now this Heiken Ashi candlestick is starting the week off with a green up candle, not reaching a higher high, but moving up at least the 2-day trend line. And as we look at it, maybe, even though gold was down for the day, maybe we will see gold slowly but surely by the end of the week crossing over, going up. Derivative oscillator is just barely negative. Price percent oscillator is trying to cross through. Now, all that's subject to change. We're just 1 day into a 5-day candle, but we'll keep an eye on it. Now, we go to the 2-day and we can see where price is moving right up that on both the weekly and the 2-day. As far as the trend line goes, price percent oscillator gaining some momentum. Derivative oscillator heading up. That's good to see. Maybe gold will keep going. We see what happened intraday after that big bump up on Friday. Just sort of losing a little bit of that momentum, but still right there on that half-day trend line, half-day flat on the price percent oscillator, gaining just a little momentum on the derivative oscillator. That's where we are on gold. We will keep our eye on gold for a potential weekly vertical crossing up over by the end of the week. Now we go to Bitcoin, starting the week off down 0.74%, red open box candle. Now when we go and we look back, we can see where Bitcoin has given us some red open box candles, but where it's continued to move up after Bitcoin moved up really strongly back in October through December there. In January, it gave us it gave us at least one red open box candle and almost a doji as it was digesting those gains. Took off again, couple of red open box candles there in late February and March, then up again, about mid-March, red open box candle, and that's about the time things were ending. So again, hopefully, starting the week off, just one day in, again, doesn't mean this is going to be a red open box candle for the week, but a little bit of slowing. Derivative oscillator still heading up though. Price percent oscillator still moving away from the red signal line. Now look at the 2-day. It's getting flatter. Derivative oscillator's losing a lot of momentum. That prior Thursday, Friday, we saw a 2-day slide. So again, we'll keep our eye on things. And what do we see on the half day? We see it up in the morning and then losing there in the afternoon. So, and that was a Wednesday, Thursday, not Thursday, Friday, Wednesday, Thursday. We saw that red open box. This is the Friday, Monday with another red spinning top. Again, gaining a little bit of momentum heading down, and we'll just have to keep an eye on things as that derivative oscillator on the half day heading still negative, losing some downward momentum, but that price percent oscillator heading down. So we'll keep our eye on Bitcoin, not starting the week off strong, but still looks decent on the weekly, looks okay on the 2-day. That's where we are, folks, as we end the week. Thank you again for being with us. Look forward to speaking live with all our Patreon members on Wednesday. Get those questions in, those stocks, ETFs you want us to help you backtrack for practice trading. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.